All right. Hey, everyone. Welcome back. It's Monday, and let's get right into this. Hey, Sam, how are you? All right, cool. Good to see you. Yeah, we'll get to that. Thanks for joining. So, if you're new to the stream, everyone else, welcome. My name is Mark Principato. In this stream, this is what I'm going to do. First, we're going to go over the economic calendar real quick. Hey, Kai, good to see you, right? Because we want to be aware of what economic events may unfold this week. Secondly, we're going to go through the charts, right? We'll take a look at Bitcoin, Nasdaq, gold, oil, and any other charts that you may have questions about. And then third, if we have some time, we'll see what kind of Trade Scanner Pro signals are present and see if there are any opportunities available on the larger time frames. All right, so with that, let's get started. First thing I want to talk about is that economic calendar. And actually, by the way, before I do, real quick, for those of you that are interested in prop firms, you can see the Apex, my code on the bottom there, my affiliate code, MPM. They're actually having a 90% sale right now, from what I understand. You just want to check their website. But now is the time to buy a bunch of those evals. For 50K account is $16.33. That's a 90% savings, right? This is how you beat them. Basically, you buy one of those or buy a few of them, cheap accounts, and you play the coin flip game. You put on 5 mini lots, the thing runs, you need to basically make 30 points, right? So if you could do 10 points at a time or 15 points 2 times, you're there, right? And they don't have the consistency rule usually with these sales. So it doesn't matter when you beat the eval, right? You don't have to have 7 days of data for the first step. The second step is when it gets tricky. Okay, that's where you have to pay the real fee, which is $85 or $140. And you may say, well, why would I pay 85 or 140 when I could pay 85? 85 is a monthly subscription. 140 is a one-time payment. Now, of course, when you have more skin in the game, now if you're going to play that same coin flip game, you're blowing some more expensive money, right? You're blowing $85 or $140. So that's where it gets tricky. That's why you have to have a sustainable system in the first place in order to receive a payout. Otherwise, you're never going to receive a payout, because when you reach the performance account phase, you have to make $2,600 again. First, you have to make $3,000. The second step, you have to make $2,600 in order to request a payout. It's kind of ridiculous, and they don't make that very clear, until you actually beat the eval and all other stuff. So I'm just mentioning. I'm just letting you guys know. Anyway, missing along at 117,500. Yeah, well, we'll talk about that. We'll talk about that. Right. So anyway, just wanted to mention that about Apex. So if you're interested in the evals, now is the time, because you can pick up a few for $16.33, and then that's where you play the coin flip game. But again, if you don't have a sustainable system, you're wasting your money anyway. Just want to mention that. All right. If you have any questions about that, let me know. All right. So anyway, now let's talk about the economic calendar. There are some pretty important events this week. Actually, the week is pretty heavy as far as economic events, but I'm only going to mention the most important, right? And that begins with Wednesday. We have the FOMC meeting and conference, right? Press conference. That's at 2 o'clock is the rate announcement, 2 p.m. Eastern time, followed by the press conference at 2:30 Eastern time. This is going to be significant because while Powell is not expected to cut rates at this meeting, the guidance that he gives in the press conference can be very telling. It can cause a lot of chaos or whatever. The market may love it or hate it, whatever hints he gives or whatever. People are going to be watching very closely. The Fed rate tool. Hey, Nugs, the Fed rate tool. There's a Fed watch tool that gives you a probability of rate cuts. And I believe it's the next meeting that they're expecting him to cut 25 basis points, right? Not this one this week, but the next one or something like that. Because I believe the Fed is expected to cut 2 times this year. We are now through more than half the year. So the next couple of meetings after this one, there should be rate cuts, right? The market is priced that in. So why this is important is if there are any surprises, like if he cuts by surprise, the market is not expecting a rate cut this Wednesday. So if he cuts, you're going to see things go vertical. Everything's going to go vertical, at least initially, right? So, and if he says everything as expected, who knows? The thing is, there's no way to know in advance how the market's going to go. So you don't want to be on the wrong side of an adverse move, right? So just be prepared, be aware. If you have any trades going into the meeting, you may, and you have profits, you might want to take some of those profits off the table, stuff like that. Now, that's Wednesday. On Thursday, we have the core PCE, right? Core personal consumption expenditures, I believe that stands for. That's an inflationary number that the Fed uses that number for their inflationary calculations or whatever, right? They consider that one of the components for how they gauge inflation. So that's an important number. I believe that's an 8:30 a.m. Eastern number. You might want to double check the time, but I believe that is at 8:30 a.m. Eastern time. That can move the markets if there are any surprises. Friday, we have, of course, non-farm payrolls. Non-farm payrolls is next to the FOMC is the next most important economic event. That's at 8:30 a.m. Eastern time, right? That's the employment report. So if there are any surprises there. Now, why this is all very significant. Hey, Hussein, all my regulars are here. Good to see you guys. Why it's important is, for one, because we have such heavy-duty events scheduled for the week, volume most likely is going to be horrendous going into the events. Like today. Today was horrendous, in my opinion. I attempt to day trade every day, and I'll tell you, this month has been a tough month for me. I have not been making money this month, even off the screen, right? Off the stream. It's been very tough. Volume has been extremely low, and there's lack of follow through, right, with the Nasdaq futures. So I'm talking primarily about the Nasdaq futures, and there's been a serious lack of follow through. Like it may start off and then just not go anywhere, right? And it's a struggle just to squeeze 10 points out of the market. Of course, there's no problem going against me 10 points, but 10 points is like a hard move to come by, where just a couple of months ago, it was moving 10 points at a clip. So it's important to recognize that. Usually this time of year, I mean, this is when we really start to see the decline in volume, but we're not even in August yet. And like today's volume, I'm like, man, this sucks. Like you're watching this thing fluctuate like in a 5-point range for like 15 minutes. Like, come on, man. And this is during regular market hours. This isn't pre-market. So, so for those reasons, for one, I'm going to hold off on the Wednesday streams. I'm probably not going to stream this Wednesday because there's no point in participating in this market. Or maybe I'll stream something else. Maybe I'll stream the FOMC meeting or something. I don't know. But I'm not going to continue to trade. Like you have to recognize when things are good and when things are not good. And volume is a key factor. Momentum is a key factor when it comes to day trades, right? So all of this news, the reason why I mentioned this day trade part is because it affects the volume. On top of that, we are in a low seasonal volume period, and August is most likely going to be worse. Please keep that in mind. I will probably take the entire month of August off as far as day trades go. I'll still do my streams, like my analysis streams, but in that type of environment, swing trades are probably a better idea, or just avoid the market altogether until volume starts to come back. It starts to pick up in the beginning of the school year, but you really don't see back to normal volume until November. That's just the way it is, okay? So it doesn't mean volume stays at its low the whole time. Volume begins to pick up. But when I say normal, I'm talking about the volume between November and May, right? That volume, that sample of volume is typically where you see significant moves. Like 30 points on the NASDAQ is like pretty normal. Like you take a trade, it moves 30 points like in a few minutes. Like that's normal. That's how it normally moves during the regular season. So, we could say half the year is the regular season, the on season, and half the year is the off season, right? And we're at basically the peak of the off season. We're going right into it. So just a few things to keep in mind if you day trade. Hey, Alex from Romania. How are you, Alex? Good to see you. All right. Got all the regulars here. All right. Kai, if I hadn't said hello to you, hello, Kai. I saw your name. I may have thought I said hello and maybe I hadn't. I don't remember. Anyway, good to see you guys. All right. So that's the economic calendar. Now, there were a couple of other important events that I noticed, like Bank of Canada has their rate announcement, and Bank of Japan also has their rate announcement. I think Canada is tomorrow. I believe Bank of Japan may be Wednesday evening, but those I'm not really mentioning those because compared to the US numbers, those are probably still going to be lesser events unless you trade those specific Forex pairs. Okay. Oh, cool. All right. Just making sure. I don't want to leave you out, Kai. All right. So anyway, all right. So you guys follow me on the economic calendar. Let me know if you have any questions about that. That's important to be aware of. All right, especially if you day trade. Now, let's get into the charts here, shall we? Let's begin with Bitcoin. As you can see, I have Bitcoin on my screen, and I'm going to make it bigger. I published my analysis on TradingView on Saturday because I saw this range, and I'm like, we're not going anywhere, right? This range, this is what I'm considering this range right here, a subwave 4. Let me move over so I'm not, yeah, there we go. So I'm considering this a subwave 4, all right? Like subwave 4 of what? Well, the impulse that I'm evaluating here is basically this, right? That's the impulse wave. And so I can count 4 waves inside of that structure. That's why I'm still anticipating, and I believe there's a higher probability of this wave 5 leg, especially, that we have this elongated consolidation. This is very typical of wave 4. Okay. These type of consolidations is very typical. So the scenario is, we break out, with a move that has conviction. We haven't done that yet. We're going to have to see 120K. We're going to have to see 121K. We cannot, that candle, if we see it, cannot close like this. We cannot see a pin bar there, right? Otherwise, most likely it's a fake out. We need to see a solid candle, maybe on rising volume. I don't really look at that part. It's really, I just judge the candle, the size of that candle, but we should see something significant and it should close strong, right? And then I believe that would be the breakout to the 5th wave. The 5th wave should have 4 mini subwaves inside of it. I'm sorry, 5 waves inside of it. You should be able to count 5 little mini subwaves. And once that wave is complete, which I suspect could be around the 130 to 133 area, once that wave completes, that means, look, the market is most likely extremely vulnerable at that point. Again, I can't sit here and forecast, we're going to pull back to 50K, because, then I would just sound like all these other fake gurus who don't know what they're talking about. The thing is, when 5 waves are in place, and Alex knows, and Kai knows too, because I call these all the time, and often I'm wrong about the magnitude, right? So I'll say, there's a 5th wave over here, but it's really the completion of it's a 5th wave of a 3rd wave, right? So then we get, instead of a broad corrective move, we get a consolidation. It happens to be wave 4. The 5th wave still steered me the right way. There was still some type of corrective move. It was just not the magnitude that I thought, right? So the thing is, if we complete this wave, this is the large magnitude wave that I've been wrong about for a few times. If I'm right about this, and that's the 5th of the 5th of the 5th, if that's what we align with, right, the next corrective wave is going to be most likely large, right, broad, meaning we can pull back a significant amount that no one's expecting. So in that scenario, if we complete up there and the 5th, it usually will begin with some kind of large corrective move, like initially, right? There's usually some kind of initial wave that's a little bigger than people were anticipating. And usually this is when all the people start buying the pullback, and they start buying too early. And then what happens often is, like, if you look at like previous corrective waves, right, like going back, you see how it unfolds, right? We can go back to this one over here, right? This wave 3 over here. After 5 waves complete, right? It doesn't just move in a straight line, as you see. It basically consolidated a bit there, right? And sucked a lot of people in before it really pulled back. Was that the 15K pullback? No, this was the 15K pullback over here, right? Was this it over here? Let's see. No, there was one where it pulled back to 15K. I don't have, that must be back. Is that back here? I don't know where it is. Anyway, the point is, it doesn't move in a straight line. Okay. But the thing is, if we are in a corrective structure, it's usually backed by some type of catalyst that's persistent, right? It could be something like that. Alex asks, he says, yes, do you remember that when you said the party was over a few months ago? I had said it was, yes, I do remember that, Alex. I do remember that. Alex called it correctly. I remember he was not in full agreement with me. He believed it was a third wave, right? Instead of the broad fifth. And he was right. Okay. So now I believe this is the broad fifth. But I mentioned that I'm wrong a lot about that because I happen to be wrong with these magnitudes. The thing is, if I'm right this time, it's a likely a broad wave, right? So the broad wave can go all the way back. I mean, it can be anywhere. If it's a wave two, which, because again, this fifth of the fifth represents a gigantic wave one. If we go to like a monthly chart, basically it represents, this is what this is what it's completing. All of this, that's a wave one. Okay. That's the magnitude that I'm referring to here. So if that's true, and that wave one completes, if you know anything about the wave counts, the rules of wave two say that a wave two can retrace 100% of wave one and still be in a bullish mode, right? Now, I think that's a little far-fetched in this case. Alex says, but yes, right, we agreed on the top. We just were not in agreement on the magnitude, right? And you were right? You had the right magnitude. I was incorrect. But like again, my point is, hey, at least the fifth wave keeps me out of trouble, right? I don't know where the next wave is going, but it keeps me out of trouble, right? It basically points to a vulnerable market. And that's what you have to pay attention to here, right? So if this thing completes, like I suspect, and it starts pulling back, you want to be slow to buy the pullback, okay? Hey, Ricky, if 130K-ish does form the top, what levels will you be looking to buy back? Okay, so good question. So this is what I'm getting into here. If this is the completion of this magnitude, right, that I'm looking at here, but again, I mentioned I'm wrong about this a lot, but if I'm right, then I mean, retracing 100%, I think is unrealistic. I just don't think that's. I think that's a low probability. But 50% is not. I mean, I'm just coming up with a random number here, right? I mean, look, if I measure this right here, 50% is right around this level here. So 72K, that would be a 50% retracement. That's not unrealistic. Might be a little extreme, but you usually get, maybe you could get a 382, a broader 382, which would be like what, a 40% or just over 30% retracement up in here. That may be in like the mid 80s again, something like that. So I would wait, because when it starts pulling back, you may see some attempts to bounce like in an area like this, and people are going to buy. And you're going to have the fake gurus come out, buy it, blah, 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 not realizing you're in possibly a wave two, right? And again, the wave two corrective move can be steep. So I would be watching for those 70s, right? And again, that's not going to happen in a couple of days. That's going to take months. That could even take years. That could potentially take 2 years. A lot of times Bitcoin will do something for a year or a year and a half before it changes its tune again, right? So that 72K would be an area to watch for. And maybe you want to accumulate into that. Like maybe you wait for, if you're like, well, if 72K is a number that you're projecting, then maybe if Bitcoin pulls back into the 90s or high 80s, that might be a good place to start accumulating again, small amounts, realizing that it could go to 70K or maybe lower possibly, right? If we're in a wave two. But remember, part of that wave two is there has to be a significant catalyst behind it. It's not going to just do it randomly. Number one. Number two, 130K may not be the top, right? If wave five extends, which is a typical thing, right? You may see 140K, 150K before that corrective move comes. My point of this, the reason why I'm mentioning this is because I just want you to be aware of the bigger picture and what kind of risk you're dealing with if the vulnerability appears. So as the market works its way higher, if you're taking swing trades like this breakout, for example, the 120K breakout, we get that breakout, that would be an aggressive swing trade opportunity. Not exactly my type, but it is an opportunity, right? And your risk will be basically based on 116K, something like that, right? Is where if it goes back below that, it cancels out the possibility, or it cancels out the scenario. It invalidates it. But if you're looking for something like that, you may be able to ride the market for maybe 5 or 10,000 points, something like that, maybe more. But you're going to have to really just evaluate that each day as you get a new candle, right? That's all you can do. You just have to basically adjust as you get new information. That's one way to play the next move higher. But after that move, now you're looking at very high vulnerability. That is my point. So you don't want to load the boat at the top. You don't want to sit there. If this thing runs to 130 or 140 and you start to see some bearish reversal stuff like a big pin bar on a weekly chart, for example, you don't want to sit there and buy more at that point. It would be a good idea to lock in profits if you have profits, for example, and just kind of maybe stay out of the market for a little while and see if it pulls back to a significant level. And if it doesn't, maybe you start piecing in with small bites again. But my point is, when that wave 5 completes, you're looking at a high vulnerability, and a lot of people are going to get caught off guard. That is typical of wave 5. Typical. They think the party's just getting started. They just think it's going to 500K. They think this party could never stop, and that's usually the top. But a top is not a single event. It's often a process. So it may pull back, run back up, maybe form a double top. Like, it can do a lot of things. It's not just a single, one candle and then, massive pullback. It's not that simple. So just keep that in mind. It's an area of vulnerability. Keep it in mind. If you're a Bitcoin investor, and I'm sure Ethereum will follow along, right? And these altcoins will probably, a lot of them will follow along, not all of them. Just keep that Bitcoin cycle in mind. All right, everyone's talking altcoin season. We're back in altcoins. Everyone's going to get rich again. I don't know. I don't see all the fake guru videos popping up on my feed. Maybe it's because I don't click on them, and the algorithm just puts things in my feed that I click on relevant to what I click on. I'm just tired of clicking on those fake guru videos, so I don't see them in my feed anymore. But usually when Bitcoin's pushing highs or whatever, you see the titles. It's just getting started and all that, whatever. Don't get sucked into that nonsense. Understand the vulnerability. That is my point. Okay. So guys, let me know if you have questions about that. Okay. Let me know if you have questions. Alex says exactly. That's what's actually important, right? It doesn't matter if you're right or wrong, right? Right. What matters is that you stay out of trouble, basically, right? So when I see those wave 5s, they have proven over and over again to keep me out of trouble. And that's the main thing, because I'm not taking trades. It's not like I'm shorting it and being like, oh, it's going to pull back 1,000,000 points. I don't do that. All I know is I should be extremely careful with longs, and I should not expect much from longs anymore, because once that wave 5 is in, we're looking at a corrective move. And what I should be doing is evaluating broader support levels and seeing if price can get there, and then evaluating the price action at those predetermined levels. That's what I should be doing. Right. And then, of course, when I realize I'm wrong, right, when the real wave 4 develops, I'm like, oh, okay. And then I have to relabel, right? Okay, wave 4. But once I see that wave 4, then I know that a wave 5 is coming next, most likely, right? It increases the probability. There's no way to know for sure. But just like now, this consolidation points to the higher probability of this wave 5 that I'm talking about. Now, the alternate scenario, if we break this consolidation instead, we break below it, right? Because we could break below. Right now, this candle doesn't look that good, but we're still inside the consolidation. We have to overlap the wave 1 to cancel out the whole scenario. Wave 1 is over here, right? This is basically where I'm labeling wave 1 for this impulse. So we will have to overlap. What is this? 108K? We'd have to go below 108. Right, so if price breaks this consolidation, and next thing you know, we work our way to 105, price works its way to 105 and doesn't bounce, then it cancels out the whole idea. Right, that's how wave counts work. It cancels the whole idea. All right, yeah, don't worry, Sam. I haven't forgotten. I'll get to it. So, all right, so you guys clear on that? All right, so I'm going to move on here. Let me know if you have questions about Bitcoin. And if I miss your question, just type it in again, because sometimes I don't see it. I think I got everyone's questions here. All right. So Ricky, you understand what I'm saying? No, you understand my scenario? So I hope that better prepares you. All right. So since Sam here is impatient about gold, let's put gold up here. I'm just joking, Sam. All right. So let's pull up gold, because gold is one of the markets that I cover anyway. What do we have here? This is the daily chart on gold. Now, gold has been strange because, I think, who knows? I mean, I'm not going to start thinking I know why gold is doing what it's doing. All we could look at are the facts and evaluate levels, right, and price structure. So this is the daily chart on gold. And the general trend has been bullish. We've been inside of this consolidation for quite some time, okay? And at this moment, gold seems to be respecting this level up here. That seems to be the range high, which is what? Around 3,400, so just like 34 and a quarter, something like that. Alex says, this, we might see all those, but I'm not. Oh, really? Oh, that's interesting. Yeah, I thought by now they'd be all over my feed, but then again, they change the algorithm sometimes, and it only reflects what you click on, right? So I click like on a lot of music videos and stuff like that, so I see a lot of music in my feed, and I'm noticing I'm not seeing any of these Bitcoin frauds, So I see other videos relevant to the markets, but not the Bitcoin ones. Anyway, so gold is respecting this resistance, right? But I would not characterize gold as bearish because it hasn't broken any supports either. So as long as this structure stays intact, right? Look at your support levels, Sam. Right now, these are your support levels that are in play. These are all of your support levels, right? And as long as they stay intact, even if it breaks the first one, it's still inside the range, right? So I wouldn't be bearish on gold, that's for sure. Okay, it's best to use gold futures or spot. Well, I mean, it doesn't matter, right? XAUUSD is basically the charts are going to look the same. You know, how you trade gold is going to depend on the product you use. Obviously, like the futures, you have micro gold futures, you have the regular contract. Those are, the micro gold is one I would recommend. Gold, I've messed around with gold. It's highly illiquid. And when you're right, it's beautiful. When you're wrong, it sucks because it just goes in a straight line and it just keeps going. Like it sucks, right? So I don't really mess around with gold. There's many ways you can mess with gold. You could do the CFD. There's ETFs. So I personally, if I trade gold, it's the micro gold futures. But I haven't touched that in a while. Anyway, so and I'm referring to day trades. As far as swing trades go, there's nothing here at the moment. Gold is still pulling back for whatever reason, and you want to watch these support levels, right? So you have a little bit of minor support in this area here, and it's possible that you might find support. But look at today's candle, right? Today's candle is still red. I don't see any bullish pin bar or anything there. Okay, we could look at it on a smaller time frame, maybe like on a 4-hour. And we could see that pullback into this, like the 4-hour shows this support a little more clearly, but we're not rejecting it completely yet. It's still, this thing can break. Also, this most recent structure is bearish. Okay, you have lower highs and lower lows. So at this moment, I would suspect that these supports, like this support over here, is likely to break. I'm not going to say it should break, but 31. So basically 3,300 area, 33 even. That would be a good, nice whole number. Break that, then you're looking at the next area around, what is that? 3280s, and then below that, what is this? Probably 3250. Yeah, 3250 area. Okay, so this is the area where you want to see if this thing can reverse. Look at the previous reversals, right? Look how the candles break above a previous resistance, right? Even if it's minor, or you get a strong like engulfing type candle, right? Notice the engulfing type candle followed by what? A little mini higher low or something. There's a number of ways you can gauge those breakouts. You can even draw a counter trend line. A trend line that basically highlights the bearish structure. And when that breaks, that's another possibility. I don't personally use those, but that is a technique. You just connect two highs, for example, and you project the third one. And when that breaks, you're likely working your way higher. Or basically what that means is this structure is no longer in play. Does that make sense? So that's gold. I mean, so generally gold is bullish, but as a day trader right now, for example, I would not be in a hurry to go long until I see those bullish changes. I mean, look at this move over here that rejected the 3,400 area. It was bearish for a few days there, right? Lower highs, lower lows, until it found that support, right? Gave you a pin bar. And then look, it worked its way up to a point and again floundered for a while. So that's why it's hard when you're dealing with the futures, because if you get a bad price and you get stuck in one of these moves, especially with the leverage, and if you have a smaller account, it sucks, man. So, I mean, that's really all I could say about gold. Bigger picture, which is really what you have to be paying attention to, is gold is just pulling back. It's a minor pullback inside of a consolidation. Watch the support levels. Watch the support levels for bullish reversals on gold. Okay, if you're looking for long opportunities in gold. I would not short gold, especially after some kind of pullback like this. It's a minor pullback, and this is not exactly a bearish trend on the bigger picture. So you better believe others are looking to buy gold, right? So just keep that in mind. Does that make sense? Okay, Ricky wants to see oil. Sure. And you guys are in a hurry today, huh? But since I'm happy to see you guys, since I'm glad people are watching me, I'll jump to oil. Oil was part of the process anyway. All right, so are you guys clear on gold? Sam, are you clear on gold? Does that answer your question? So when you're in a range, this is clearly a range. Look for support and resistance levels and look for the trend to basically give you a bias, right? This trend is generally bullish. So that means support and resistance levels are more likely to hold. That's where you're looking for your opportunities in gold. Even whether you're looking at day trade or swing trade. Does that make sense? Okay, cool. You can even play options, right? Gold options. You could do futures options. You could do ETF options. You could buy. Well, I'm not a fan of buying options, but you could do like bull put spreads, right? A bull put spread over here, where you buy the lower put and you sell the higher put, right? And then you want that to become worthless, basically. The lower put is just to protect you if you're wrong. You don't make as much money with those, right? But the probability of making money is greater. So there's a number of ways you could play that. So yeah, so gold is certainly want to keep on the radar when it's pulling back like this. I'm glad you brought it up, Sam, because I think a lot of people make the mistake is they buy gold up here. Hey, it's breaking out. Hey, it's going to 5,000. And all those newsletters, gold is going to go to $1 billion, and they're going to revalue gold and whatever. Okay, that's what people usually buy it, and they get stuck. You want to be buying this thing when it looks ugly, right? And it still has some more room to look ugly. All right, cool. All right, so let's move on. Let's take a look at oil. Do oil, and then we'll jump over to like bonds and stuff like that. The boring bond market. All right, so let's take a look at here. Let me just erase these. Let's go to oil. So we can use CL1. CL1 is the crude oil, light sweet crude futures. Okay. And let's start with the weekly chart. Oil is tricky, man. Oil is very geopolitical sensitive. I mean, ever since all that drama that we had recently, oil is not going anywhere. I mean, look at this, right? And you're right in the middle of this range. Look at this also, right? Forget the range high. Look at this. So there was a level here going back some time. Again, this is a weekly chart, right? That goes all the way. That's like the whole year right there. And oil had this support, okay? And it's still messing around there, okay? So what is that? XO, AMD, sure. Thanks for putting that in the chat. I'll take a look at it. So let's just go through oil, and we'll take a look at the bonds and the dollar. So you're in a supportive area right now. And the problem with this area is it can go either way. But I notice oil's been sort of kind of inching up quietly. Oil is also a measure, energy is a measure of inflation. So if it starts rising, I guess that would be a sign of inflation, I guess. I don't know. I'm not an economist. But as far as support and resistance levels go, you're at a support level here. It's hard to call this a trend because, you had this movement here, which was bullish. Okay. I mean, is this even a wave structure? It might be. Let's see. Yeah, this is basically a wave. This is a really it's hard to recognize, but here I'll point it out. I mean, you could look at a wave structure here. Wave counts are good as a roadmap, right? So this is your wave one, your wave two pullback, which barely pulled back. That's like a 382 pullback right there, right? Wave three, which is usually never the smallest wave, and typically wave threes are very dramatic like that. Wave four, which should not overlap wave one, okay? And as you can see, there's no overlap, right? There's no overlap there. There's no overlap. So that means wave four is still intact, all right? Which means wave five is likely to follow. That's what that means. That's the way you can interpret that. So you can confirm, the way I would do it is if wave five is in play, you're breaking this resistance. That's your confirmation that wave five is now active. Okay. Now, and then you want to see if you can count 5 waves in that. I mean, it's a very messy wave. It's not a clear cut wave because wave 4 is all over the place here, but it has not overlapped wave 1. If it overlaps wave 1, which happens to be around $63, around, yeah, 63. So you could say if this thing trades below 63 or to 60 or whatever, and it's closing there, especially on the weekly, then it cancels out the whole impulse. That means wave 5 is not likely to follow, is what that means. It means you're in some kind of consolidation, right? And you have to wait for it to basically clear itself up. But if it holds, if this support stays intact, then you're looking at a wave 5. Now, how far can wave 5 go? Well, typically, wave 5 goes to the top of wave 3. That's a reasonable expectation. Now, it may not make it up there for other reasons, maybe fundamental, blah, 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 but that would be one place to consider. To be more conservative about such a projection, a lot of times you can use like the projection tool, right? The trend-based extension, and you could basically measure a structure like this, right? A 3-point structure, and that'll give you some reference points. It doesn't mean the market will get there. It means that it's a good reference point to measure your profit objective from. So you could say, okay, it's a possibility. And here the 1618 is around $72.82, right? That's around here. So that's not even a new high. That's not even a higher high. But what that tells you is, hey, this would be a good place if you're long to take money off the table. While everyone else is buying it or everyone else holds it because, hey, this thing's going to go to $100, and all the fake gurus come out, you at least know there's an inflection point there. And that's a good place to maybe put a limit order to take profit, or if there's some kind of hesitation there, take money off the table, something, right? It's an inflection point. It's a profit objective area. That's how you want to treat that. And if it goes beyond that, great. Then you're looking at this area here, the high. And if it goes beyond that, then you look back at some other price history and you could spot some other levels. But that's what oil is showing right now on the bigger picture. Does that make sense? So, I mean, I like it as a long. If you're working on the day trade time frame, certainly be trying to work on the long side, right? Are you looking to day trade this or swing trade this? You could you can trade options on USO, stuff like that. I don't really trade those things, but there's certainly looks like there's some potential opportunity there. Are you anticipating a bullish oil? And while you're answering that question, let's move along here, and I'm gonna get to AMD. Don't worry. Would you take a look at coin? I sold a third. Sure. If anyone else has also anything you want me to check out, just put in the chat and I'll get to it. And if I forget, just remind me. Swing trade. Okay. All right. And that makes sense, Ricky. That makes sense. Were you going to use options? Are you going to use futures? I mean, you could do the ETF. I mean, there's this number of ways you can play oil. But it's certainly looking like on the bullish side. So again, what would cancel this whole thing out that I just described is you break the support right here, which is $65, right? And you start pushing below 63. This thing does that, then everything I just said is no longer valid. All right, make sense? Okay, so let's take a look at the bond market real quick, right? We don't want to lose sight of the bond market. Although usually there's not much going on, not much changes, right, as suspected. But you want to just note where it is, especially this week, because we have that FOMC and we have non-farm payrolls this week, and those move the bond market if there are any surprises, right? So the bond market is still inside of a consolidation, nothing happening here right now. But what you want to watch for is if there's any significant break. Okay. Oh, nice, Ricky. Okay. All right. Yeah, makes sense. I think you're leaning on the, at least on what the structure is saying, right? Things can change, but you should have your levels now, and you should have your bearings based on what I shared with you there. So again, with the bond market, like watch for this range low, watch for this range high. After the FOMC, after the non-farm payrolls, even core PCE could possibly move this thing around if there are any surprises, because that's really everything begins with the bonds, right? The 10-year note especially. This is where the game begins. This is the cost of money. So we break below, that's not a good thing, right? If prices break below, that means yields are rising. That's bad. No one wants that. Banks don't want it. People who have to borrow money don't want it. People who have to pay money, loans back don't want it. Rates are rising, right? If the bond market rallies, that means rates are pulling back. And that's also inflationary. But again, these breaks, I mean, this is not even any kind of significant trend break here. This is not, it's just a minor range break, right? It may be something, but I wouldn't go nuts over that. I wouldn't be making any fake guru videos about such a break, right? Now, the fake guru videos would be more justified, if you're breaking some more important levels, something like these levels. Does that make sense? So maybe over the next quarter, we'll see a change in the bond market. But until then, it's like watching snails go to the bathroom. All right. Bond market is like, yeah, that's a good analogy. Alex says here, I got to show that one. Alex says here, the bond market is like watching a woman trying dresses. It just, that's funny. Yeah. Yeah. Okay. But the bond market doesn't ask you if it looks fat, though. So anyway, all right. Nice analogy. So let's move along here, and so when we look at the bond market, the other thing we should take a quick look at is the dollar index, right? DXY, because this is basically, they go hand in hand typically. But when they don't go hand in hand, right? When their behavior is not inverse to each other, that usually means something, right? So just kind of looking back here, remember the dollar index, everyone, the dollar is going to zero. Oh, the dollar, I don't know. This doesn't look like it's going to zero to me. Okay. I mean, so stronger dollar, that's interesting. Stronger dollar compared to the basket of currencies. This is also a higher low. This is also an inverted head and shoulders. This thing may be turning around. We may be looking at stronger dollar. Now, why is the dollar rallying? I have no idea. Right? What's up with this stronger dollar? So if we start breaking resistance levels on this dollar, that should imply rising rates, right? Because usually rates rise and that bolsters the dollar, right? Because it costs more money to borrow dollars. So rates typically rise. Jay Powell hasn't been moving an inch in spite. Right. No, I know. He's doing his job. I think he's doing his job correctly. I mean, not to get political here. I just think the guy's just trying to do his job. And, he's trying to be responsible. Cutting rates, I just think, would be very irresponsible, considering we are in an inflationary environment, considering the tariffs are going to just pile on an inflationary effect. I mean, considering those things, cutting rates would just be irresponsible. And, it may feel good in the beginning, like heroin, but it's not a good idea in the long run. It's not. Just like the stimulus checks were a bad idea in the long run, and we're paying for that now, right? And people are suffering. A lot of people are suffering because of that. I mean, you go, well, it's mostly poor people or people who don't make a lot of money. You go to the supermarket and everything just keeps going up every week. You're like, what's going on here, right? So I mean, that's certainly meaningful. So stronger dollar, while it's bad for Zuckerberg, it's not, it's I don't know. I don't think it's such a bad thing to see a stronger dollar. It makes us less competitive, though. That's why I guess the administration doesn't like it, because they look at everything in terms of being competitive business wise. Just like, for many decades, China, they artificially controlled their currency, right? Manipulated their currency, made it cheaper so that everyone does business with China. So, I think that was part of the agenda with the weakening dollar, purposely weakening the dollar so that it's good for our businesses. But I don't know. It's usually not good for the people, the citizens, usually. Anyway, all right, I'm not going to get into all that political, economic stuff. Let's talk about, but keep an eye on the dollar, though, because this is an interesting move. Right? So stronger dollar usually implies rising rates. Maybe the dollar knows something in advance of the FOMC. I don't know. I don't know why it has this bullish look right now. All right, let's move along and let's take a look at some of these requests here. So I saw what AMD and a coin, right? So let's start with AMD. Who asked about AMD? Was it you, Alex? Let's see. I think it was Alex. No, it was Axel. Almost same letters as Alex. All right, so let's take a look at AMD. Wow, look at that. I remember when AMD was like in trouble. Look at this thing. That's pretty amazing. Let's look at a weekly chart. Right. So I think someone asked me about this recently too, about AMD. Like there were a couple of these stocks. Hood was another one that was going berserk. I mean, look at this. So maybe this has to do with the AI stuff. I don't know what this has to do with, but wow. If you bought AMD on when it looked horrible, you're doing really well. What was that like? Going back to November? I mean, I remember when AMD was like suffering. Look at this. So here's the thing. You're at a resistance. All right. So don't get all wrapped up with. I mean, yes, it's a pretty nice move. I can actually count 5 waves in that. All right. Let's go over the wave count. So this would be like wave 1 right here. Right. That initial push right there. Here's your little mini wave 2 consolidation. This is wave 3. Wave 3 can't be the smallest wave. That's certainly not the smallest wave. Right. If I put it over here, it's about the same size as wave 1, possibly about the same size. So it's not the smallest wave. If it becomes the smallest wave, then it's not wave 3 because it can't be the smallest wave. That's the rule. And then this is your wave 4, your little wave 4 red candle in here, right? Remember, this is a weekly chart. Wave 4, a little pullback, and this is wave 5. So, like I always say, when you can count 5 waves, the price becomes very vulnerable. Or as I like to say, the party is over. If you're an investor and you bought at great prices, excellent. You should be looking to take money off the table. Oh, is that what it is, Ricky? Okay, that's a good guess. Ricky says because of Trump's negotiations with the EU. Very possible, right? Because I know there's always something going on with that. Always something. Some tweet comes out, next thing you know, the Nasdaq futures are 200 points against me. Anyway, so when you can count 5 waves, which can be counted here, price becomes vulnerable. I don't care how great the news is. I don't care how much billions and trillions of dollars they're making. None of that matters. Okay, it really doesn't when it comes to these shorter term movements and when you can count these. Remember, wave counts basically in a way account for sentiment. That's really what it's a measure of. So when 5 waves are in, that's usually a pattern that everyone that was going to buy has bought. That's typically what it means. And it often unfolds whenever there's a wave 5, often what comes next is a corrective move. That's just the probability. No guarantee. All right. I bought at 81. Would you get out? Okay. So you bought at 81. Let's see. Where is that on the chart here? 81. That's a great price. Wow, that's the bottom, man. You bought this thing at the bottom. All right. So, well, here's the thing. So what I'm saying is it's vulnerable, right? But at this moment, this is a weekly chart. At this moment, there's no reason to sell. At this moment, a reason to sell would be a weekly candle, like a red close, a pin bar. That would be a good reason to like maybe take something off the table, right? One thing that I would do if you haven't taken any profit, it might be a good idea to take a little off the table. I can't give you financial advice. I can't give you advice. All right, so don't take what I say with a grain of salt. What about Okay. All right. So Alex asks about maybe putting on more. All right. Well, I'll answer that. My AMD average is 122, but I'm thinking about, okay. So here's the thing. Well, if you want to add, right, you want to add on a pullback. So we'll talk about pullback levels. But right now, if you're in, especially from a great price, what's this thing at? 173. It's just not a bad idea. Look at these resistance levels, right? So this is what you want to pay attention to as this thing continues, because markets don't move in straight lines like this. Look at this pin bar, right? That's a great sign. This is a weekly pin bar. Talk about a sign of weakness coming, right? That's what you want to see as far as, oh, maybe I should do something. Maybe I should take something off the table. Maybe I should exit the position and take the profit, right? I don't know what your specific situation is as far as that goes, but when you see this, that's your heads up. That's a good one. And look how ever since that pin bar, it worked its way to the $81 low, right? Just because a pin bar doesn't show up doesn't mean it's going to go to a specific number. It just means weakness is ahead most likely. And boy, you got weakness there. Also, watch, I could probably count 5 waves going into that, right? If I just count this structure right here, right? This structure, are there 5 waves? Let's see. Maybe we could say that's a 1 and a 2. This is a 3 and a 4. And of the 5th, this is, well, you have this 3-legged thing over here. What is this? Let's see. 1, 2, 3, 4, 5. Well, no, so this thing throws it off a bit. This thing throws it off. But impulse waves typically look like this. And when you can count 5 waves inside of that, like actually, you could probably skip this one, right? It gets subjective. And that's what people don't like about the wave counts, right? So if that's a 1 and a 2, and this is all part of this whole leg over here is 3, because 3 can't be the shortest wave, right? And then this is the 4, and this is the 5th wave, right? Heads up. 5th wave, right? Heads up. Corrective move likely to follow. And that's what you got. So you can count 5 waves here. So you're in that vulnerable position. But just so I would be watching for selling activity in this area. Okay? So that means 174.05 up to 185.50. That's a good 10-point range. So, yeah. Okay. So see, Alex is saying he's taking some off the table, right? And I agree with that. I always think it's a good idea when you have a nice profit like that, especially you sat through all these attempted pullbacks. This thing hasn't really pulled back, and as you can see, a typical pullback is much steeper, right? It's usually something like this. So it's not a bad idea to take something off the table. Maybe not the whole thing. You have to decide what's right for you. I can't tell you what that is, but I just think generally it's a good idea when you have profit to take something off the table. I'll always tell people that, especially when the move looks like this and you can count 5 waves. Now, again, if you want to be a little more aggressive with it, maybe wait for a bearish reversal, like on a daily time frame. You don't have that yet, okay? Like maybe you wait for, a bearish pin bar somewhere in here. Maybe you wait for a red candle, like these red candle situations. And you say, well, but if I wait, I would have gotten out and blah, blah, blah. Right. But the thing is, you weren't at the levels you're at now in those instances. Plus the Nasdaq and the S&P were going berserk all during this time, right? Driving this thing higher and higher. The Nasdaq and S&P are also in vulnerable areas, which this thing is a big part of, right? The Nasdaq. So, okay, I want to take some off the table and re-enter. Okay, so I think that's a good idea. Take something off the table. Now let's talk about re-entering. So in a situation like this, all right, first of all, there's no reason to sell yet. You could wait for a red candle, you could wait for a pin bar, or you can just sell at a random level. Put a what do you call it? A limit order at some random price somewhere in here and let them take it. Right? Nothing wrong with that. Now, as far as letting it pull back and buying some, this is where you want to pull out like your retracements, right? I don't even have to do that. Look, you could just look at this move right here, right? The 50% is right around here somewhere, right? That's 50% retracement right there. So what is that? Around 128 area, 125. So there's also some old resistance in that area, which is likely to act as a new support. That would be a good place to look. Also, the other places to look for pullbacks would be slightly lower than these previous pullbacks, like this over here, like this right there, that area, because that would be a failed low. You also have one over here. That would be a failed low. If it basically goes into that area and then reverses. Just keep in mind, though, the broader structure. This thing can pull all the way back to here and still be generally bullish, right? So let's say, for example, you buy some up here, 149, so 150 area. Let's say you buy some here and it breaks. It keeps going lower. You have to decide, do you want to take a loss or you want to try to hold on to it there? You may want to have a limited loss, a stop loss in that area in case it breaks to these lower levels. Do you want to take $25 worth of pain on the, or maybe you want to start very small because it can push these lower levels? If it breaks below that 50%, then that's not a good thing. Okay. You may get yourself into one of these moves, right? You don't want to get caught in one of those. So that's where 50% can be helpful. As long as you stay above it, then you can look for the bullish structure to stay in line. If it breaks below it, then it kind of cancels out the bullish structure. It's sort of like the wave 4 situation, right? If wave 4 overlaps wave 1, the impulse is no longer valid, right? So just keep that in mind. It has these massive moves, and then the pullbacks can be significant. Let's just looking back over here, right? Just as an example, if we cut this move in half, right? This move from that low to that high, right? And we look at the halfway point. This is the halfway point. I mean, it went straight there. Look at that. It went like straight to the halfway point in a matter of weeks, right? It gave back 50% of that move, of that particular move, right? And then what does it do? It attempts to bounce. But the tricky part here is, and it even gave you a higher low, the tricky part here is it failed here, right? And that's where things can get tricky. That's why you have to have some sort of defined risk, because there's no guarantee that this bullish trend will continue. You may get one of these situations, and then next thing you know, you're like, how is this thing 80 points against me, right? So you have to have a defined risk. There has to be somewhere where you say, okay, if it goes below this price, I'm done. That's it. I'm not going to add any more or whatever. I'm going to get out of what I got. Like, you have to have that point defined. And it's usually like some sort of like 50% line or something like that. Does that make sense? So that's AMD. Alex says here, right, okay, right. So let's take a quick look at coin. And by the way, while we're at it, I'm just going to turn the Trade Scanner Pro on. Let's just see if there's any signals worth mentioning, right? Trade Scanner Pro, nothing. Look, it's funny, called AMD is short back here. That's why you got to be careful with those daily. Well, as you guys know, you don't take signals outright on the Trade Scanner Pro. You have to confirm. It has to confirm your analysis. And at this point, actually, this would have been an aggressive short. Aggressive meaning because you have a higher low in place and it broke a resistance. This is not exactly a bearish look anymore. When it's doing something like this, that's not exactly a bearish look anymore. Okay, bearish look is lower high, not higher high, right? So anyway, let's take a quick look at coin. Okay, coin, as in Coinbase. All these things have made these monster moves. Look at this. And now Coinbase, of course, has some selling activity here. So this is a good comparison for AMD because, I mean, look what occurred here about a week ago. Look at that. What is that? Bearish pin bar. What a surprise, as Jerry Seinfeld would say, right? So that's what I'm saying. You see one of those, that's usually like, okay, I need to make an adjustment here, reduce risk, get out of position, lock in profit. That doesn't exist yet in AMD, not yet. Okay. But even if that candle closed, let's say it closes a full green candle, right? Then you get like a bearish inside bar afterwards. Also, not a good sign to see after such a move. So anyway, Coinbase pulling back. Okay. So Coinbase is probably going to be more appropriate for maybe buying into a pullback. But you have to understand something, right? We're talking swing trades here because Remember, this thing here moves along with Bitcoin, right? AMD moves along with the Nasdaq. Bitcoin and the Nasdaq have been ridiculous as far as making new high after new high after new high. They don't know how to pull back. There's been no pullback, no significant pullback. So when the pullback comes, it's probably not going to be pretty, right? And these things are all going to pay the price because they all follow, right? So you have to keep that in mind. That's why swing trade, I wouldn't be investing. I just think this is not a time for investing. Investing was back in April when the market's making these dramatic lows and everyone is soiling their pants, and everyone is forecasting that there's the beginning of a recession and the Nasdaq's going to zero. That's when you have to, that's when you should be looking to invest. Hey, Axel, no problem. No problem. All right, thanks for stopping by. I'll be wrapping this up here shortly anyway. But thank you again. It's good to see you. So coin, right? Same thing. Let's look at the support levels because generally it's bullish. Can we count 5 waves in here? Let's see. Right, this is wave 1. We can count this like as a wave 1. Is this wave 1? Actually, this whole thing is wave 1, right? I get these magnitudes mixed up sometimes. Look, wave 2. The Trade Scanner Pro called a long at the bottom of that wave 2. Interesting, right? Typical wave 3, right? So wave 3 complete. This is probably completion of wave 3 up here, right? Let's see, 1, 2, 3, 4, 5, 3. This is 4. Actually, no, you can count 5 waves in this whole thing. So if this is a 5-wave structure, if that's what that is, then we're seeing the corrective move, right? So when you see that, you want to look at the 382, you want to look at the 50, right? The 50%. So cut the move in half, and the 38.2, whatever, 382. You could say 30%. It's all the same. It doesn't have to be precise. It's going to be around here somewhere, right? So those are the levels that you're looking for as far as buying Coinbase for a swing trade, meaning you're looking for it to reverse and maybe retest the high. Of course, it would be nice if Bitcoin does something similar. As we know, with Bitcoin, we're anticipating a wave 5, right? A wave 5, bullish wave 5, which means this thing is likely to benefit from that. So you have to keep. Sometimes you have to keep some of that context in mind. I don't know. I know you don't short Bitcoin, but would you short coin? No. I mean, yeah, I don't short Bitcoin, but because of what I just mentioned, Bitcoin still has that potential wave 5. And like the price structure on something like coin really doesn't matter if the parent index, like Bitcoin is like the parent index, I like to call it. Wherever Bitcoin goes, this is likely to going to go. So if Bitcoin works its way up to 130, this thing is, no matter how bad this thing looks, it's probably going to rally, right? So the price action doesn't mean as much. Now, if Bitcoin had the same look and Bitcoin was peaked and Bitcoin had a lower high and this looked like this, then I'd say, yeah, I'd be open to shorting coin. I am open to shorting stocks, but I don't short stocks outright. If I'm going to do a stock, it's going to be a spread. It's going to be like in this case, like a bear call spread, right? Or collect premium. You don't make a lot of money with those, but the probability of profit is greater. And your protection is, I like the way they're protected. You don't have to really worry about them. So that's how I would short a stock. I wouldn't short the stock outright unless it's a day trade, but I don't day trade stocks. If I day trade anything, it's a Nasdaq futures. So, if you're going to day trade the stock, that's one thing. You try to get what you can, use a stop loss, and that's that. But for a swing trade, I'd be looking at like a bear call spread. You're thinking of bear call spread? So yeah, I mean, all right. So if you're thinking about a bear call spread on something like this, well, for one, you want to be careful doing it when it looks like this, right? Because you're sitting right at a low. This thing can easily bounce. Especially remember, we have a lot of economic news this week, and something like Bitcoin may benefit if something is said on Wednesday that catches people by surprise, a surprise rate cut, I don't know, something that squeezes the market, you're going to see something like this, right? So if you're going to do a bear call spread, for one, you want to wait until you see some kind of bullish attempt. And then, of course, your levels are going to be up here somewhere, right? I mean, that's where I'd be looking for the bear call spread, somewhere where a resistance is proven. But I'd want to open that spread while the market is working its way up into that, something like that. And usually with a bear call spread, I mean, you can. I don't know if a stock like Coin has 0 DTE options. Not all stocks have 0 DTE. You may have to you may have to do like one day, or you may have to do a couple of days, maybe a week of time. Okay, that's something like that. I don't know. I haven't looked on this one, but that's how I would treat. At least wait for some type of a bounce attempt, because again, Bitcoin still leans bullish, and no matter how ugly this looks, shorting this now or taking a bearish position now, you're shorting something that's going into basically even their minor supports. You have a minor support right here, right? You'd be selling right into that. So I would wait for something bullish to occur and then look for the bearish follow through after that. The aggressive thing to do would be to open up that call spread, the bear call spread, while the market's going up, before the market confirms. That's where you get the best prices, but you're taking the most risk. Because if it blows through, you're going to lose on that spread. The good part about that is the loss is fixed, right? So the market can run away and run against you forever, and that call can only lose a fixed amount of money, that call spread, right? It's usually, though, whatever you're making, when you're collecting premiums, it's usually asymmetrical. So for example, if you collect $50, right, as your premium, usually it means you're going to be losing $200 if you're wrong. It's usually like that. It's usually 3 to 1 the wrong way, right? Or it's 1 to 3. You win 1, but you lose 3. But the probability of winning that 1 is greater because time is on your side. You have the time value on your side. Does that make sense, you guys? All right. So I think I answered everyone's questions. If I missed your question, just ask again, because sometimes I don't see the question because I can't read the chat. So that's Coin. So that's I see there's no signals there. Let's look at something like, now, interestingly enough, look, the 4-hour called a long, which not working. Right. So like, again, this structure is generally bullish, and this may have prompted you to get long if you're using something like the Trade Scanner Pro. This is why it's so important, as I tell people, don't use these as initial signals. I had a guy that just tried it out like the other day, and I warned him. He's like, "Oh, I'm going to backtest it." I'm like, "Dude, I'm telling you right now, it's going to fail, because it's not a strategy in and of itself. This is not the environment for that." So the way you have to use the Trade Scanner Pro, because look, the environment changes, you have to adjust. The way you have to use it in this situation is you use these signals as your heads up, not as your signal to take action. You use it as a heads up. I explain this in all my AM streams. Let the signal appear first, right? Like for example, if I replay this, I'll just replay this real quick, right? So we can actually see what it looked like at the time. Right, so if I just back up the data there a bit. Oh, look, they put the word replay on here. You know why they put this word replay on here? You want to know why? Because there are too many fake gurus making videos where they replay a trade, and it makes it look like they took the trade and made all kinds of money, but meanwhile it was a replay. There's a lot of videos about that. Anyway, that's funny. So if I replay this, okay, and I just inch this thing forward. Okay, this is 4 hours at a time. Look, that was the 4-hour signal. See that? And that would agree with being bullish, generally speaking, right? I would assess the general trend on this to be bullish and Bitcoin to be bullish. So this would be a trade considered, to take, considered, a swing trade to consider, right? But the thing is, as I tell people, you don't take this. You do not take this. You use this as your heads up. This is your early warning. Oh, okay. Now I should be looking for an entry after this appears. This is especially important when you're dealing with like a 4-hour time frame or a larger time frame than like a 1 minute, right? Now, what you're looking for on this time frame is something like, well, I was going to say something like this, where the candle goes back above the blue line. But in this case, look what happened. it went back above the blue line. You may have gotten long and it went straight to the stop. So it's tricky. That's tricky, man. If you happen to miss that and you weren't in it, then okay, great. You missed the stop out. Great. Now you wait for the next signal and you do the same thing over again. You're waiting for some sort of confirmation after the signal appears. Does that make sense? That's very important because if you don't do that, you're just going to lose money all over the place, especially in this environment, especially if you're working on small time frames, like a 1 minute and that kind of stuff where things are changing constantly. All right. Makes sense, you guys? Okay. So, and you could sign up for the Trade Scanner Pro, as you can see with the link that I have up on here. Again, you have a 14-day free trial. Do what I just said, paper trade, first of all, and use these signals as your heads up, and then wait for a secondary confirmation. That could come in the form of a green candle. It could be after a red candle. It could be a pin bar. It could be an inside bar. It could be a retest of the blue line, the entry line, right? Price goes back above the entry line. You guys, and if you guys want to see that in action, you guys go back and watch some of my streams on my channel where that's how I've been taking trades for weeks now. And when they work out really well. And also you'll notice there have been many instances where it keeps me out of trouble, like where I avoid the trade and it stops out. A signal pops up, I avoid it and it stops out because the secondary signal never shows up. So that's when you're working on very small time frames, it can be very helpful. But it's also helpful with these large time frames because here, let's just look back at this signal here. This one worked out really well, right? Let's just take a quick look. Let's just replay that real quick. So again, this is daily. This is daily. This isn't even the 4 hour. Let me replay this one candle at a time. Right? So these are days. There's your heads up, right? There's the signal on a daily time frame. So let's see what happens. If you wait it out, let's see what happens. Oh man. So there wasn't much. The only chance you had on this time frame was you had the red candle, right? Followed by the break of the red candle high. Again, these are daily. This is probably a quarterly report or something. That's most likely a report. But the point is, it broke the red candle high on this time frame. That would be an entry. But if this was like a 4 hour time frame, or if this is a 1 minute time frame, that would still be an entry, right? You're going back above the blue line. But look at that. It went straight to the profit objective. This is atypical. It doesn't do this normally. Okay. But just to kind of give you an example, the initial trade was on this candle, right? This candle here. And if you took that, it pulled back a bit and you had to sit through a little bit of red. If you had just waited until the next day, these are daily candles, and it broke that high, right? That was a much better entry than taking the initial signal. Does that make sense, you guys? So that's just some examples, with the Trade Scanner Pro, how that works with the secondary setup. In fact, I'm planning to make a video explaining just that, or like a brief video, because I explain it in these streams all the time, but no one's going to rewatch an hourly stream. I realize that. So I need to make like more instructional videos and stuff. All right, you guys. So that's pretty much it. I'm going to just go back to Bitcoin here. BTC. Actually, I can go to just take a look at Bitcoin perp. All right, this is oh, I clicked the wrong thing. There. All right, this one just doesn't have the levels on it. But all right, so you guys have any questions? Let me just look back at the chat here. Berkshire. Hey, Andrea, how are you? I haven't seen you in a long time. Berkshire Hathaway. I'm wrapping up my stream now. I've been on this thing for more than an hour. When you asked that? 4 minutes ago. Yeah. All right, I'll take a quick look at it. What is that? What's the symbol? I don't even know the symbol. I guess I have to type in the full name. Burke. what is it, like Burke A, I guess? I guess I could look at Burke A. Is that right? Let's see what that looks like. So we all know who this is. What's the price of this stupid thing these days? $721. Is that right? Oh no, $721,655. Who trades this? Do you actually trade this? I mean, I guess you could buy one share or a fractional share, a quarter of a share. But come on, man. Well, anyway, just looking at this thing, this structure is bearish. Okay, lower highs, lower lows. In fact, it kind of looks like reminiscent of that AMD chart that we were just looking at before the rally. And you have a lower high right here. You have a bearish candle today. It's an outside bar today, or a bearish engulfing candle. So this doesn't look good. This doesn't look bullish. I would be with a move like this, I'd be anticipating a retest of this low right here, which is 702,056 and 15 cents, in case the 15 cents is relevant. All right. Yeah, that's right. That's right. That's right, Alex. Okay. Hey, look who's here. Nicola Chiaro. What's up, man? From Italia. My Italians. Come stai? My Italians. Buongiorno. My Italians. This is Nick, guys, from Nick from the remember the show? ICTC? The co-host that was with me, Nick? No, that's the wrong one. Where is he? It's Nick. That was the Italian guy. That was one of the Italian guys. He's a great guy, man. The Italians, bravo, bravo, Italiano, bravo. He taught me some Italian words. All right, because I'm a fake Italian. He's a real Italian. This is a real Italian guy from Italy. He lives in a beautiful place, nice part of Italy too. He's showing me some video of it. What's going on, man? See, tutto bene, tutto come stai? Yes, that's right. Tutto bene. All the Italians were the best, man. The Italians were the personality of ICTC. Without the Italians, it would have been boring. Okay, they were so funny. Burke B, it's the same thing. Is it going to be the same thing? Let's take a look at Burke B. Good to see you, Nick. You must be bored. Nick said something really funny to me one time. He said, he was talking about the Southern Italians, and he said to me, in Southern Italy, he said they're busy being lazy. He said too busy being lazy over there. I really thought that was funny because it's like too busy being lazy. Like how are you busy being lazy? I just thought that was really funny. Was it Burke A you put in there in the chat? Burke B? All right, let's put Burke B up here. Yeah, it's the same chart. It's the same thing. It's the same idea. So, you could trade the B. Oh, I see. Okay. All right, because it's $481. All right, but the chart's the same. Yeah, right. That's from the Rome. That's why they call Romania, because of the Romans. Right. Romania. So you see, you have a real Italian in the chat here today. It's good seeing you, Nick. Yeah. They're totally in business. Yeah. The Southern Italians are too busy being lazy. Okay. And this is coming from a Northern Italian. They're not the same. Obviously, the North and the South are not the same. I wouldn't know this because I'm a fake Italian. But I come from the Southern Italian, so I'm lazy. I guess that means I'm going to be busy being lazy. So anyway, really funny stuff. But good to see you, Nick. You want to see any charts you want to see? Any charts? So Andrea, everything that I said about Burke A or Burke B or whatever, whichever one I covered, it's the same thing, right? Lower high, right? Lower high. So you're likely to test this low if this trend stays intact. I mean, you got a level over here. I don't know what this means in terms of economic implications. What is that? 469, I think that says. All right. Okay, cool. Now, so now that Nick is here, I'm going to spend a little more time. I was ready to sign off. Now my friend Nick shows up. All right. Nick is really funny. He also had this this thing with the coffee. He's an aficionado of coffee. And if you don't make the coffee the right way, he's got a problem. Okay. So, yeah. So I got this, I got to show this video one time, but I got this video of him complaining about coffee. It's really, really funny because coffee has to be a certain way. Right. So it's the same thing, Andrea. All right. So any questions about that? Let me know. But yeah, don't mess with an Italian man's coffee because if you get it wrong, he's going to know. Right. Because no one makes coffee like they make it in Italy, apparently. I don't know. I don't drink it. So I wouldn't know. But don't mess with his coffee, man. Yeah, he really had a hard time with the Spanish coffee. You would think in Spain they'd know how to make coffee, but he was not happy. He was not having it. And he had to pay €5 for it. I remember. He was not happy. Just give an Americano. I don't think he'd be able to handle that. About charts, you know I'm a crypto guy. Well, if there's a coin you want to see one, I would pick. Go ahead. Nick is like he's like the honorary guest here, next to Alex from Romania. I have to get over to Romania. When Nick keeps asking me when I'm coming to Italy, I have to get over. If I go to Italy, I have to go to Romania too, because it's not that far. Yeah, the €5. Yeah. He said 5 effing euros. Those were his exact words, and he said them in English, and he was not happy about that coffee at all. And that was a nice hotel too, and they couldn't make the coffee right. And then he sent me a video of the real Italian coffee. He sent me like what real Italian coffee looks like. Ethereum. Okay. Nick wants to see Ethereum. Let's take a look at Ethereum. All right. So ETHUSD. All right. Yeah. So well, it's basically a copy of Bitcoin, right? It's basically doing what Bitcoin's doing, sort of. It's sort of playing catch up. Let's look at the 1 week. So here's the thing with Ethereum. It's funny, and we had a whole group of Italians over there, and there was one guy, what's his name, Luca. I got to do my impression. I'm not going to do it now, but I got this impression that I do of him. Not Luca that was the trader. Luca, the other guy from Switzerland. I mean, what a character! What a funny guy. He had a really funny thing to say about what he called pink quota. I don't know. Do you know what I'm talking about, Nick? Pink quota. He had this whole thing, a really funny story. I'm not going to repeat it here. But anyway, so let's talk about Ethereum. Maybe I should do Ethereum in an Italian accent. No, I don't. I'm not making fun of Italians. I'm Italian. I can't be making fun of Italians. So we have a resistance up here, Nick. This is the thing. So this is the weekly time frame, right? This is what you got to watch out for. If you're in it and you have profit, this is a vulnerable area. Plus, the thing with this is now Bitcoin has room. We were talking about Bitcoin earlier. Bitcoin has room to go higher. Oh, he remembers pink quota. Yeah, he's like, in Italy, we have a thing that I call pink quota. That's my impression of Luca. What a great guy. Anyway, so Ethereum is at a resistance. But like we were saying with Bitcoin has room to go higher, right? So if Bitcoin goes higher to like 130, like we were anticipating, Ethereum is likely to follow. So that's why this is an area here to consider taking something off the table if you have it. But I wouldn't take everything off, and I wouldn't short this either. Because yes, it looks ugly, it looks bearish, but if Bitcoin squeezes, most likely this is going to work its way through that resistance. And we're looking at what, 4K, the 4K area, right? Because this thing hasn't made the all-time highs yet. It's still lagging Bitcoin. What if Bitcoin works its way to 130, right? And that's a profit objective area that I'm looking at. If we get up there, Well, I know I say that on purpose, Kai. I say Italian because I just think it's funny. It's Italian, but I say Italian just to be funny. Yeah. Oh, so you know what that is, Kai? You know what that is? Looks like ETH could be a larger correction. Right. Well, so the thing, so Ethereum, I would say I would call Ethereum conflicted. Now remember, Ethereum is the leader of the altcoins. So if Ethereum pulls back, oh, he knows pink quota. Ah, nice. Okay, I thought Luca made that up himself. I thought that was his invention. I guess not. I guess it's a common thing. So anyway, yeah, we were at this really cool bar when he explained this story. It was really really funny. So, but all the Italian, I call them the Italians. They were so cool. I had such a great time with them. The Italian family, and they accepted me with open arms, even though I'm a fake Italian. So yeah. So again, back to Ethereum here. So here's the thing, Nick. Like it's conflicted. This is going to affect altcoins. So if this thing pulls back a bit, you're going to see the altcoins pull back. But I would not be in a hurry to get out until Bitcoin turns, right? So this does not look good here. Let's go to a daily time frame. This is not, it's not exactly good, but I wouldn't rush out of this thing either because of the Bitcoin potential. Because I'm anticipating that this thing is following Bitcoin, right? So you have this area. This is the area here where I'd be looking for like either taking more profit off the table or something. Give it a chance to run into that area. I would not be in a hurry to get out of this, and I would not be anticipating that you would short something like this anyway. You're probably just interested on the long side. So, like that would be the biggest warning on something like this would be I wouldn't short this. It's tempting to short, for day trades. Sure, you can get away with this for day trades, but for bigger picture, no way. And as far as investing goes, this is not a good place to invest. This is not a good place to be buying more because it's at a vulnerable area. Sure, it can go higher, but this is good like if you're in and you want to give it a chance to maybe push up into that 4K area. I think there's an opportunity for that, and if you're willing to take the chance for it to do something like that, right? If it starts breaking supports, like the first support would be here. What is that? 35, 30, it says 35.07. You could round that to 35 even, right? If this thing starts pushing below 35, then maybe a broader correction is likely to follow. In that scenario, I would be anticipating Bitcoin should look horrendous, right? Bitcoin should be putting in some kind of top if this thing is breaking, right? Something like that. I use Bitcoin as the leader here because this thing doesn't trade by itself. Going to be an interesting week, right? And there's a lot, and as Kai is pointing out here, right? It's good point, Kai. That we have a lot of economic events lined up this week. We have the FOMC, like we talked about. We have core PCE Thursday, and then we have the non-farm payrolls on Friday. Any one of those events can upset what's going on here, right? It could be a good thing, it could be a bad thing, right? It's all going to depend on the outcome of the event. So all we could do here is really look at levels and say, okay, we have a resistance right there. We're starting to reject it. This is not a good place to be putting on new positions. Maybe if you have a profit, maybe you want to lock some in. It's not a bad idea. It's just going to depend on how much profit you're willing to give back, right? This thing may correct more significantly. It may find a bottom soon, like a support soon, and break through and work its way toward 4K. Either way, the general structure is still bullish. This is a bullish structure, right? Because it's got nothing but higher lows and higher highs. When the supports start breaking, that's when that's when we should be anticipating a continuation of the change. Does that make sense? All right. So I hope I answered your question, Nick. That was Ethereum. Yeah. See, I went way over today because my friend Nick is here. I usually I don't have too many friends come to my streams. So anyway, because I don't have too many friends. But you guys are my regulars. You guys are my friends, but I've never met you guys. I met Nick. Like I met him. I spent some time with him in Spain. So, I consider him a friend. Although some of you, like Alex have been coming on here for years. So Alex, you're kind of like a friend, but I've never met you. All right, cool. Yeah. All right. Yeah. So I would still agree bullish. Just just be cautious. And I wouldn't be putting on more risk here. That's all. If you're in a position, great, let it ride. You may deal with some noise, but I would be okay with giving it a chance because of all the bullish stuff, and especially because of Bitcoin. That's really like the main thing. If I come to New York, we're gonna have a beer. Oh, absolutely, Kai. Absolutely, definitely. Anyone that comes to New York, let me know, man. Let me know. I'm very close to the city, to Europe. Yeah, I know. I know. He keeps telling me I know. There's so many places I have to go. I have to go to Netherlands. I have to go to Spain. I have to go to Belgium. I can't forget about staying in Belgium. I got to go to Belgium. I have to go to Romania. I have to go to Italy. I have to spend a lot of time in Italy. Spain, I have to go back there because there's some girls I want to see. But yeah, that's the only reason for going to Spain. Girls, there's a lot of them there. At least in Barcelona or in some other cities. But yeah, I know there's a lot of culture and history in Spain too. But I'd rather go see that stuff in Italy. You're pretty solid. You sometimes think too. Oh, thanks, Alex. No, I appreciate that. Well, things are tough, man. I got to be real. You have to be realistic. I have to be realistic. I'm not one of those. Oh, I'm this great guy. You have to be realistic. So anyway, but no, I don't have any friends. I'm telling you. I have a couple of friends. Nick is one of my friends. You guys are my friends. I love Barcelona. I love that city. It's not perfect, but I really enjoyed my time there, and the time that I get to spend with my ICTC people, like Nick over here. If you want to see Nick in action, go to I think I still have the ICTC link in the description. You could watch the beginning of the show or whatever, and it's me, Nick, and this guy Gert from the Netherlands, right? We were the main hosts, and so you could see Nick in action. Or Nick, if you have your website, I think Nick has a website. You could put it in the chat. I think you should be able to, if YouTube doesn't block it. But if you guys want to check out Nick's stuff, Nick does like commentary and stuff, I think, on the altcoins. Very knowledgeable about all these projects. He knows everything. He knows every single one of them. I don't know any of them. And he knows every little thing. And it's funny, when we were at the show, every time Pepe coin would come up, I'd call it Pepe coin because that's how I pronounce it, because it's funny, right? Pepe coin. And they're like, no. Him and the other guy, no, it's Pepe. It's Pepe coin. I'm like, no, man, it's Pepe coin. Like, no, it's Pepe coin. But you want to know what? I think it is Pepe coin because I saw another meme coin coming out called small Pepe coin. So why would they call it small Pepe coin when small Pepe coin has much more meaning than small Pepe coin? That's my argument there. They're having a small one come out as a joke, I guess. I don't know. I don't follow these things. All right, cool. All right, you guys. So it's nice seeing you. Thanks, Nick, for stopping by. It's so good to see you. And we'll talk. I know we'll be talking again soon. We talk regularly, but it's the first time I see him on the stream here. So great to see you. I'm excited. As you can see, it gets me excited. I was falling asleep. I'm like, all right, guys, I'm going to turn this thing off. And then Nick is on here. So anyway, guys, all right, so cool. Guys, I hope you enjoyed the stream, had some fun today. Hope you got some good stuff out of the analysis here and got some good perspective. That's what I try to deliver each week. I'm probably not going to stream on Wednesday for the day trade because, like I said, with the volume, it's horrendous. And plus, that's FOMC day, so it's probably going to be extra horrendous at the open, right? So there's no point. There's just no point. All right, cool. Yeah, Nick, it's great to see you, man. If you ever you can share your website or whatever. I'd say it, but I can't remember it. I can't remember. He says it in the stream, in the ICTC stream. I can't think of the name of it right now. But him and the whole crew of the Italians, they have such great stuff going on over there, right? The Marcos and Emiliano and all the great guys, man. They're so sharp. There's such great things going on. I need to be over there. All right, you guys. So I'm gonna leave it at that. How we do it, time? Yeah, I've been talking a lot today. So, guys, enjoy the rest of your day, the rest of your evening, wherever you are in the world, especially if you're in Italia. Bravo, Italianos. All right, enjoy the rest of your day, the rest of the evening, and thank you for watching.